Hmm. Hello guys, we're just waiting for a few people to register. So I'm just going to wait before I get started. I think there may be some issues with people being able to register. So I'm actually going to just wait before we get started. I think we have one person here. I think others are trying to log in at the moment. So do bear with me for a short while. In the meantime, just say hi and we'll get started as soon as we get it. Hey, how you doing? I'm going to have a terrible time pronouncing your name. Is it Barup? Barup? If it's incorrect, just put on the chat box incorrect and I won't mispronounce it again. Yep, I can see some more people turning up. While we're waiting, let's just see if there are any questions before we get started. So anybody already trading, just put yes in the chat box and that will help me determine whether we should be starting at the sort of beginner stage or at the advanced stage.
Asif. Yes. We're at
Please do bear with me. We're going to get started very shortly. I think we're just checking a couple of things and then we'll get straight into charts, straight into looking at how markets are opening in the UK and have a general look at what is happening across the world, and may have a chance to look at gold as well. Put in the chat box if you have any particular currencies that you want me to have a look at as I go through the process. But as I said, I'm just waiting for a few more people to register and join us. While we're waiting, is that Simran? Simran, is that your surname or your first name? You can just put in the chat box. We can find out a little bit about yourself, because we are going to wait a couple of minutes before we get started. I think there are a couple of issues which will resolve very, very quickly. Yes, your chat is coming through. I can see your chat. You just put can't type in the chat as it's disabled. Right. Okay. Cool. 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 Can I ask where you're based? Just write down how I should address you. That way I won't make any mistakes. Ah, Dubai. Cool. And have you traded before, or are you already trading? Ah, Simran. Yeah, Simran. Are you already trading? Or looking to get started? That's cool. What do you trade? Mainly in currencies, indices, commodities, gold. What's your favorite? Gold. Yeah, a lot of people love to trade gold. Me also. And we will have a look at some gold charts very shortly. I did a bit of analysis on Thursday where we called a drop to 77, 77 meaning 19978, and turned exactly that. So I'm going to kind of show you a little bit on how I look at charts and how I look for trade setups. But as I said, we're just going to I couldn't Simran, I couldn't possibly answer that question. And I'm not even sure if I can repeat it in these days of everything that goes on these days. But you're probably right, by the way. Right, I'm just waiting for a message to get started, and then I will get started. And I do apologize for the late start, and I appreciate you bearing with me. Okay, so we have a question while we're waiting for other people to turn up, and let's see if we can answer it. What would your take be on interest rates if the Fed, by the Fed, and how correlation goes with gold? Well, really interesting question. In my opinion, everything's correlated, right? When you think about interest rates and you think about inflation, you think about price of commodities, goods and services, they're all going up, right? And gold traditionally has been a safe haven. And you can almost see the beginnings of a rotation coming out of the indices, which are kind of forward looking in terms of interest rates, because obviously if interest rates go up, that's going to put pressure on stocks, and that in turn will probably rotate into gold and other safe havens like bonds, etc. So I always try to say to people that there are strong correlations on everything. For example, the euro dollar and gold. It's just literally having an overview of what is happening and then deciding which instrument is likely to move most. The advantage with trading gold, for example, is that it's widely traded, it's very liquid in the sense that you can get in and out very, very quickly. And therefore, a lot of people look at these interest rates and look at gold. And by the way, we'll do a bit of a deep dive on gold if you want me to do that. But we do have some unemployment numbers coming out later on today. And that will also be interesting because I think I did an ebook over a year ago talking about how central banks use interest rates to dampen down inflation. And inflation is basically prices getting out of control, where there's plenty of demand and suppliers and service providers feel obliged to keep putting the prices up, which then pushes wages up. This is much more of a fundamental question that I'm kind of answering here. I'm much more technical, but it's really interesting that the whole purpose of how to bring down interest rates is actually to suck the growth out the economy without actually damaging it too much. And I think this is what we're experiencing right now. I think central banks are at a stage, a tipping point, if you like, in terms of, has the economy been sufficiently neutered to stop higher wage increases, to stop higher prices? And that's all having an impact on things like the stock market and commodities and what have you. So that's my take on that. So we're going to start probably very shortly. And again, I'm just waiting for the green light to get started, and then we will get started. Let me just check one more time. Perfect. Okay, guys, right. So look, apologies for the delay. Let's just get started. And I want to just make sure that everybody can see me and that everybody can see the first screen. Can you just put yes in your chat box? And that way I know we're all on the same page and we're all going to get started. Can you see the Zenfinex current market analysis Thursday, 27th of April? Just put yes in the chat box and then we'll get started. Perfect. Right, so first of all, thank you for attending. We're going to cover how I look at trading markets, and I'll go on a little bit about myself very shortly, but I do want to take a moment to allow you to read this risk disclaimer. It is mandatory, so please take a few seconds, as long as you need, to read thoroughly the risk disclaimer, which really just talks about the fact that trading is risky and prices can fluctuate, and you should really know what you're doing before you get started. So that's something that we do as part of our mandatory risk disclaimers. So what is the agenda today? I'm going to give a little bit of introduction about who I am and what my purpose is here, and how I'm really here to help you either to get started in trading or improve your trading if you're struggling. And by way of introduction, I've been trading for 23 years. In fact, it's maybe even tipping over to 24. 1999 was my first trade. Mainly a futures trader, went on to trade interest rate futures and then other instruments from a technical perspective. And then I switched to algo trading more latterly. And that's really my speciality. I develop algos to identify trading opportunities. And really, what are algos? They're just really a systematic approach on trading. So whether it's done automatically with an algo or whether you have a systematic approach, which I think is crucial in trading, to improve your trading. Because those of you who have traded before, you do know, that if you don't have a set of rules to trade by, you're not going to have a long-term success in this. So developing a systematic approach is going to be one of your key priorities. And those of you need to see this screen. So that my contact details are here. If you find that I haven't covered anything that you want me to cover specifically, please send me an email. My role here is really to help you get started or help you to improve your trading. So don't be shy. I answer all my emails. So what are we going to cover today? We're going to have a look at a few different currencies, so a couple of indices, and then some commodities. And I find, by looking at these, you can get a really good handle on what is going on generally. And, at a later stage, we're going to talk about some of the free tools that Zenfinex allow you on their Plus Zenfinex portal. We're going to look at how we can utilize these tools to get trade ideas, to see how other analysts are looking at markets and see if they are comparable with yours. And certainly I find them to be a great learning tool. So we'll come on to that, as we get further into the webinar. But my main priority really is to look at live charts, do some analysis, show you how I look at the analysis, and show you what I do in terms of looking for trade setups. So enough of the presentation. Let's go straight into charts. So as I said, I've got a small selection that I look at, but each and every one of these, I look at them in exactly the same way, because what I have learned, in my many years of trading is that it doesn't really matter what you're trading, whether it's a commodity like gold or whether it's the euro dollar. You really want something that is liquid meaning that you can, get in and out of trades without too much, spread affecting your profitability. And also, you want to be looking for instruments that are moving on a constant basis. And what I'll do is I'll just run through a few of these things that I'm looking at the moment, and then we'll take some requests. If you have any particular instruments you want me to look at, more than happy to do that. So let's just start. Let's look at the stock indices for the UK. And those of you who do watch my webinars on a regular basis, and just to remind you, we do these on Tuesdays and Thursdays. And I try to do a bit of a look for trading opportunities, see how they pan out on the next webinar, and that way you can start understanding, what I'm looking at. So what are we looking at right now? The UK stock indices, 100 leading stocks in the UK, and a lot of people in the UK trade this, but I find it quite an interesting instrument. Let's just look at this a little bit. So what do I do as soon as I look at a chart? And for those of you who may be asking the question, what indicators do you use? I don't. I use support, resistance, fibs, anything that gives me an idea where price may be heading, rather than with traditional technical indicators which look backwards. I'm not saying that they're bad in any way. I'm just saying that over the years I've learned that forward is what you're looking at rather than in reverse or looking backwards. So what I do whenever I look at an instrument, regardless of what it is, I start to mark up my chart to see what I'm looking at in terms of framing. So from a visual perspective, right, we can see the FTSE has sort of been climbing up. Obviously, this big drop is the COVID thing, which we won't talk about. And then it's been slowly climbing. And now we've hit a level of resistance. And when I look at the FTSE 100, it's not too dissimilar to the American indices as well. And we can look at those as well. And once I've got the weekly perspective, I then start drilling down and looking to see from a daily perspective what is happening. So from a daily perspective, we hit a high at this point here. Let me put the cursor so you guys can see here. And it's created a range, obviously quite a large range, but what we can then start doing is maximizing it and getting a little bit closer to see where and what is happening right now and how we may be able to take advantage of it with any trading opportunities. From a pure visual perspective, we hit a high here, we hit a low here. This is the range. It's actually hit a level of resistance, which I'm going to pull it down a little bit. And we can see that prices hit that level, came down, tried to go back up, but then fell. So obviously this line here is going to be a key level that we need to watch for either a breakout or a reversal. The other thing that I can spot pretty immediately, and those of you who have traded before will probably see that there's a gap. And I will cover gap trading on another webinar, but I do find these very interesting, because if you do any back testing on your own charts, and by the way, I'm using a MetaTrader 5 utilizing the Zenfinex live account. So we can see there's a gap. We can see that prices couldn't quite get back to this level here. and that we have a level of support here, which we need to watch. So already now, we're starting to drill down on any potential trading opportunities. So now what I would then do is go to the 4-hourly and start to look at what has been happening in the last few days. And what we can see here really, and I may have to go back a little bit further. Let me just this off. And by the way, do feel free to ask me any questions. If I'm just going to check if there's any questions. Right, I think we're okay. I will look at the question and the chat box from time to time. So on the FTSE, we have this area here between 77.63 and I can't read that number. It must be 79.61. So from a trader's perspective, I can see that there's going to be resistance and support there. But how do I look for a trade right now? So what we then can do is start mapping out what we're seeing in front of us. We can see here that, we've had, whoops, let's do that. We've had a uptrend for quite some time, right? And that uptrend has broken, retested it, and anybody who knows how to trade trend lines, often what will happen is when a trend is broken, it'll often come back to kiss to say goodbye, which is an indication that we may be finished with this uptrend and starting to look for weakness. And that is, further backed up by the fact that it couldn't get past this point here. So we are looking to see if the markets are going to continue to fall back to the shorter time frames. We can see now that we found a little level of support here, albeit on a very short time frame, and we also have a little bit of resistance here. So now, from a 4-hourly perspective, we can see that we want to try to take some inference in terms of, do we go long or do we go short when we're looking for a trade setup? And I just want to reiterate, I use this same methodology, whether I'm trading gold, currencies, indices, it's the same. So let's now start looking at if this is indeed a downtrend. In fact, I'm going to make sure I don't remove these lines. Let me just bear me for a second. Just want to put a channel in here, which might be a bit more useful. Just bear me for a second. I'm going to get rid of this. Okay. So I want to put that object back in again. The problem with MetaTrader sometimes, it's not the best tool for charting, but it's good enough. So remember, I was looking at this gap that is important to me. I've got this range, and now I want to develop a channel. And what I'm really trying to do is frame the market for a trading opportunity. So what we're looking at from a 4-hourly perspective is, and I will put that trend line back in again, which was here. So we had the break of the trend. We couldn't get past the resistance. It's starting to channel down. It's hit a level of support. Now, what we're looking for, if our thesis is that from a 4-hourly perspective, the market is slowly grinding downwards, we know that gaps get filled. So on this particular occasion, even though there's a strong bar appeared in the first, if I go down to an hourly, we'll see that a bit more clearer. So this is the market open. So every time it's hit the top of this channel, what's it done? It's come down. It's come down. And what we really want to be doing is saying to ourselves, is the market going to continue in a channel going downwards and to break this level here? So from a trading perspective, whether you're doing short term or scalping or whatever, the two places that I'd be looking to get in on these particular trades would be, I don't know if I can put an object here, just bear with me for a second. Yeah, I can't really do that here. So I'll put my cursor. I'll be looking to sell here, or I'd be looking for a breakout here. And that's the trading opportunity that I would take. And I'd be looking obviously closer at the time of, for example, this break here. So if the market breaks down below this level here, the areas that it has to continue breaking is this downward channel and then this level of support. So there's probably a good 50 pips in there if we go for the breakout on the downside, or if we see markets rally back up again, I would certainly be looking to short again. So my idea really is that I want to look for shorting opportunities until such time this level gets broken, because then this downward channel has definitely broken, and then I would switch my bias back onto the upward momentum. Does anybody have any questions on that? Because I'm going to do gold next, and we can look at gold in that same level of detail. As I said, I do exactly the same regardless of the instruments that I look at, but I will show you from our Plus Zenfinex tools how we can get some analysts doing the hard work for you, where they will put their trading ideas there, and then you can utilize some of the things I'm teaching here in conjunction with those tools to help you in your trading. Do you think that would be useful? Just put yes if you think that's going to be useful in the chat box. And like I said, you do have my email, and I'm more than happy to sort of go through my regimented approach in terms of looking for trade setups. So if there's no more questions, or there's no questions on the FTSE, let's go to gold, and we'll do the exact same thing, remembering that we have unemployment news coming out at 1:30, so we have to bear that in mind too. So I'm now just going to switch over to gold. And again, I do exactly the same thing. I look for the longer term perspective. For some reason, we've got a gap here, and I don't know why that is, but I'm going to just put a level of resistance there, because gold has touched these 3 points and hasn't been able to get past it. If we go from the daily perspective, we can see the 3 levels that the market is trying to break. I think I got asked a question earlier, how will interest rates affect gold? And I think I covered that, quite extensively in terms of what other factors or what instruments are affected by interest rate announcements, later on, I think it's this week. So here we go. So we've got resistance here. We're looking from the daily perspective. We're going to start framing the market. We've got resistance, support. And whilst this looks like a very simple procedure, this is kind of you framing the market, looking at where markets turn and trying to understand why. Why did the market turn at this point here? Why did it not, or was it not able to break through this level here? So if the market is giving you this information, it's important that you understand it and how you can utilize it in your own trading. So we can see here, we've started to build a bit of a frame. Obviously, if markets or gold prices go through this level here, we're not going to chase it. We're going to wait for a pullback and then take it at this level here. This is what I'll be looking for from a slightly longer term perspective. I know this is a daily chart. We are going to drill down into shorter time frames, but what we're able to see is that we have a channel developing here. And it's been following this channel for some time, and coincidentally, this level of resistance is also hitting the level of the channel resistance as well. So it's going to need some energy to break through this. The other issue we have is really, and I need to drill down a little bit closer here. We can see for the last few days, remember these are daily bars. Let's draw a box around this sideways action for at least 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trading days. So markets hit this level of resistance, came down from a bullish perspective, right? It's good that the price hasn't broke through these levels here, which means currently there is still strength, but in a sideways market. And with strength, resistance, resistance, and that's how you should be looking at really playing your trading opportunities, that you have levels of resistance. I'm going to move this down just a little bit more, because that's what I think we need to break for it to continue going up well into the 2100s and maybe even beyond. But the question we have to ask ourselves is, will it break this level of support? Because if this holds, then gold is likely to continue going up. Let's go from a smaller term perspective. And what we're able to see is we have that same sideways action. We have a couple of breakouts, but the bulk of it is in this area here. I might just make this box a little bit bigger. So this is our sideways action. There's still trading opportunities for people who trade intraday, but from a longer term holding position, I would really wait until this box breaks and seeing how it behaves once it gets to this level. So there's still, a fair amount of movement that we can grab if it breaks out of here. On one of my previous videos, I talked about markets or gold breaking out of a particular range and coming downwards. It did exactly that. But right now, we can see that it's in a very much a sideways. If we drill down a little bit further and go to a 1 hourly basis, we can start looking at seeing what is actually happening from a slightly shorter term perspective. What we can see here is that even within the larger channel, we have a channel developing. And the good thing about channels is they give you, again, some guardrails. For it to break through, it's going to have to break through this resistance. And if it falls and it doesn't reach anywhere near there and it breaks this level here, let's draw some levels here, then we're looking at weakness, but then our guardrails are keeping us within this box. So what I'm really trying to show you is, depending on the time frame that you're trading, whether it's an intraday short-term perspective, could be a different perspective from a longer term. If you wanted to, for example, hold gold, you'd really be looking at buying opportunities for it to break through this 2041. And right now, the way that it stands, before some of this news has come out, because when the news comes out, everything could change. Depending on the news announcement, we could be changing our view. But as we look at the charts currently at this moment in time, we can see the boundaries that have been created. We can see that whilst we're trapped in this range between 2009 and 1967, it's looking like there's some strength, and we have to obviously guard ourselves against news coming out, which might affect that. But there's probably still some opportunities for people who are looking for even shorter time frames for trading opportunities here. Again, utilizing the longer term levels of resistance, which can prevent you from going up. So, my bias at the moment is on the upside, mainly because the channel is hitting, coming down, immediately reacting, hitting the top of the channel, coming down, and now we're in that area where if it gets much above to 2007, then there's a strong chance that it could continue going up. Again, everything I'm saying, and this is from a short-term perspective. With short-term perspective, whilst you look at the longer term direction, you're really just trying to take bits out of the market. And again, it's all about perspective in terms of short-term trading, intraday trading, swing trading. You have to look at the markets in a slightly different way. In fact, I might just ask the question right now. Are the attendees here, are you short-term traders or longer-term traders? Just put L if you don't want to type too much, L or short, or I for intraday. And either one of those, where I get the majority, I will try to show you how I would look at playing that, from a goal perspective. So anybody wants to put any input in the chat box, just put long-term trader, put L. If you're a short-term trader, put S. If you're an intraday trader, put I. And then what I'll do is I'll see if I can find a couple of areas for you to look at on each of those perspectives. Okay, so let's have a look at some longer term stuff. I think from a longer term perspective, let's just have a look at this again. So from a longer term perspective, and I'll go to the daily for that. A bit closer into here. We can see from a longer term perspective, gold has been rising and rising. Yes, it has its dips, but these levels do not go lower than these levels here. Indication of strength. And it bounced off the bottom of the channel. And whilst it's oscillating, it's still heading to the top of the channel with some major resistance. We talked about those three resistance points going on the weekly chart. So we know for it to break through here, once it breaks through, I think there's going to be a lot of conviction. There'll be a lot of liquidity above here, whether they are buy orders looking to take the market long, or whether they are stop holds. People are putting their stops in, thinking that it's going to come down to the bottom of the channel and maybe even down here. So reading liquidity is something I'll do on another webinar, but understanding where other people would be looking to place their orders is also part of your trading playbook. You need to understand how would other people be playing this. And the longer the sideways action remains, the more liquidity we're getting on either side of this basic range, basically. So I do think we will have some pretty sharp moves right now. Whenever you have a sideways market, the breakout will be quite aggressive. So watching these two levels will be quite key. And I'll just call those out for you a little bit. So I'll be looking for a break above 2012 and a break below 1968. Okay, look, if there's any questions on what I've covered here, please ask now, because I'm now going to sort of go through some of the signals on Plus Zenfinex. And I'll explain what Plus Zenfinex is in a second. So let me just pull that up. Do it again. So right, so you should be seeing a web browser, which is our portal for education purposes. It's called plus.zenfinex.com. And there are some amazing tools in this particular portal. And the great thing about what Zenfinex do is they provide these absolutely free. And why is that important? Because anybody who is on this webinar now is obviously looking for direction, looking for ways to improve their trading, ways that they can become more profitable. And the more tools, the better tools you have, that you increase your probabilities substantially. I'm just going to run through very quickly what these tools are, but I'm really going to mainly focus on trading views. Just give it a second to start up. Let me just put featured ideas first. Okay, let's get rid of that. So on the Plus Zenfinex portal, the tools that are included include things like trade ideas. And I'll run through, just an example of these. In fact, I may just do gold here. So we were looking at a bearish, I think this particular setup is no longer valid. So this channel, it tried to break out of it, but then it continued. I'm pretty sure this is on a daily perspective. And then it's starting to, come down from that basis there. Let's go to trading views. Might be a bit more information there we can use. So when you go to trading views, you'll be presented with some trading ideas, because the people that contribute to this particular portal, are experts in their field in terms of trading. And what they'll do is they'll put forward their ideas. You can see quite clearly here on the USD CAD. This particular analyst is looking for the market to come down. And what we'll do in a short while, we'll look at this same setup on our charts to see if it makes sense for us. They're using an RSI and a 9 moving average and a couple of moving averages and a Bollinger Band. And, we'll come back to this, but you'll be able to, search through and look for trading opportunities, that happen on a sort of continual basis. So you'll always have some ideas on which way the market's going, or confirmation of your own analysis from other analysts. So let's just go back to featured ideas. I think there may be some things we can just talk about here. Yeah, so this one is just looking at, let's have a look at the euro dollar. So it'll give you a description of what they believe. So the euro dollar has been coming down, found a pattern called an inside bar. Inside bar basically means that where you have a range, or the high and the lower bar, the inside bar will mean that it hasn't actually gone on either side. And with inside bars, a breakout of an inside bar is actually, a very, very powerful setup, and it's worth watching these and seeing how they develop, because once you develop confidence and belief in some of these setups, it'll give you more confidence to place trades on your account. So anybody who wants access to this, just I'll show you how to access it a little bit later. So a bullish event triggered fast stochastics on the 27th, so today, at 7:40 GMT, crossed above so they're using like a MACD or stochastics type setup, where they're looking for a breakout on the upside, because it's so oversold here. They're looking for the market to go back up. And the purpose of this really is to help you with your knowledge, and when you start seeing this on a regular daily basis, and if I was beginning my trading journey now, this would be a great portal for really coming to at the beginning of my trading morning, when I'm doing my analysis to look at what I'm going to be trading for the day, just to flick through this, look at what other people are saying about maybe the market that you're thinking about trading, and seeing what they're looking at. And that can be really helpful, because it can be confirmation for you to see if your strategy, if your setup, coincides with others as well. And obviously, when you get a dark green, it means there's a strong bullish signal. And if we go to, for example, let's look at another one, Aussie dollar. They're using an outside bar. So an outside bar basically means you had a small bar surrounded both from the high and low perspective on the next bar. And again, a breakout of that is a bullish indication. They're using stochastics here to give them an indication that the market's going to go up. I'll just cover another feature of this, which is pretty cool, I think. So we talked about, I think with one of our participants earlier, about news coming out at 1:30. So where we have news coming out, I think I'm more interested in the US dollar, to be honest with you. In fact, what I can do is filter these where I'm only interested in the G7. And this is what we're looking at: GDP growth, initial claims, high meaning there's going to be a high impact. And the great thing about this particular tool is that we can look at previous announcements and see how that impacted price. So let's see if I can show you this. So this is going to go back month. I think actually it's on quarterly basis. So this particular chart, which is built into the economic insights, will go back in time and look at how other news announcements affected price, which is pretty cool because when they have forecasts, the actual can sometimes deviate from that, and that deviation can be quite useful because if we look at impact, so this is looking at previous news events and how price was impacted 1 hour after the news. So on the last news event, prices went up, hit a level, and then came down in that 1 hour period after the announcement, which I think is really cool because it's all very well waiting for news, trading news, but what is really cool is you can go back in time and say, well, how did positive news affect price? How did negative news affect price? And this kind of does it in quite a nice, neat way. And if you wanted to go a little bit further, not just from a 1 hourly perspective, you can go even the 4 hourly perspective, and you can see the news was announced here, and here's what happened 4 hours afterwards. Initially, the price went up, and then it came down. So price moved in a range of 66 pips during the 4 hours following, ending with a bearish trend. So if we look at the actual forecast, I think somebody asked me the question of what is the impact going to be of this, that, or the other. This is a fantastic tool for helping you kind of identify A, when news is going to appear, and B, how that news had affected previous previous market announcements, whether it's 1 hour past the news announcement or whether it was 4 hours or even shorter. Actually, I think there's a 15-minute option as well. So if we look at the same, so this was GDP growth. We look at jobless claims, which I think is going to have an impact today. So we can see the jobless claims are getting higher and higher and higher. Let's see how that previous news impacted. In this case, the I think it's the euro dollar. So we're looking at the euro dollar on a 5-minute basis. News was announced, immediately shot up, and during the 4 hours afterwards, hit a level, probably a level of resistance, came back down. And if we go to a slightly shorter time frame, 1 hour, we can see price shot up, came back down, and then started continuing going back. So I think actually, particularly if you're looking at news as possibly your trading ideas, it's good to see how news actual against forecast and previous have impacted prices either 1 hour or 15 minutes or 4 hours after the event. And in a way, it's a strategy in itself, because once you start understanding how news is affected by above forecast, below forecast, and what that can do to price, you can start building up a bit of a trading plan for when this news is announced, and you can be ready, because if it's above forecast, you can look back in time and say, how did positive or above forecast news impact price in a 1 hour time frame and a 4 hour time frame? So you can start building a bit of a strategy. I'm going to do a whole webinar purely on news trading. And those of you who want to sort of attend these webinars, please, take a note of my email address and contact me. I'll make sure you get onto a list where when I do these different types of webinars, you'll be able to participate in those and hopefully learn, more as part of your journey. Another part of this news economic insight is that it can show, what impact price had based upon the same kind of principle. Look, initial job claims, 50% of the time after the previous 6 events, it was bullish. 50% of the time it was bearish. This one's not particularly helpful because it's saying 50-50, but the average range. So when you're looking to place targets, you can see what the average range was from previous news announcements, whether they were as expected or not expected. So this is for people who like to trade news and prepare for the news on both sides. Because those of you who have traded news, sometimes what can happen, right? You see the market shooting up and you think, okay, I'm gonna buy. And no sooner have you bought, it goes exactly the other way. And this is where this becomes pretty powerful, because you can see what happened on previous news events and how that had impacted price moving forward. As I said, I could do a whole 1-hour webinar just on this particular tool here and how we can prepare for news coming out, which happens on a regular basis. It's a strategy in itself. So we've got about 9-10 minutes left. I know it's going to be a slightly shorter webinar than I normally do. Does anybody have any particular instruments or any question they would like to ask me? And I'll focus on that. If you don't, I will look at some of the trading ideas or trading views and show you how I plot them on my charts. So rather than just take the trade directly off, trading views or featured ideas, I would put them on my own chart and see how that fits with my own analysis. So let's see if I've got any requests here. Any particular instruments you would like me to look at, please let me know now. If not, I will go on to look at some trading charts with some of the signals that have been presented today from the Plus Zenfinex portal. So let's have a look at this. So they're saying USD CAD may fall between 36 to 51 pips. And what are they using for that? Short below 36.50 with targets at 35.95 in an extension. So what I'm now going to do is I'm going to pull up the USD CAD chart on the 30-minute, and we'll try to see if that particular idea makes sense to us. So let's do that now. So I'll just stop sharing that. In fact, let me just jot some numbers down so I don't have to keep going backwards and forwards. So USD CAD on a 30-minute perspective, 36 to 51 pips. And I won't bother with the levels because I'll be able to see them. So let's now go to charts. And hopefully you can see my charts. And let's see if we've got USD CAD here. We haven't, so we need to add USD CAD. The way we do that is by clicking on this symbol here, looking for USD CAD, which is here. We add it to our market watch. We'll have a look at this chart here. So let's have a look. So they were saying bearish, right? So let's now go from a 30-minute perspective as they were doing. In fact, I'm just going to go to daily first. I'm going to draw my support and resistance levels where I see them. And, sometimes I get asked the question, why aren't they at the tip? Why at the candle? For me, they're guidelines. They're not actual places where I'd be placing trades. It's framing the market. Where could some resistance be? We can see the markets came down and sharply reversed off this point here twice, actually. Hit this level, went up, hit resistance, came back down the same level, and now on its way up. It's broken this level here. This level here. And so in many ways, if I go now to the 30-minute perspective, our lines are still there. And what they are looking at from a 30-minute perspective, they're probably looking at some resistance here. The only problem with this particular setup that they've suggested is I wouldn't take it. And the reason why I wouldn't take it is because I'm seeing two forms of strength. I'm seeing strength in the upward channel, and I'm seeing strength because it's broken through this level, and now it's, just need to squeeze a little bit more. So this level of resistance, once this level of resistance has broken, in fact, this channel might just need a little bit of adjusting, because I think it's hit this level here, came down, broke down, trying to keep going up. So we're at a very, very crucial level here. Do I see a sell signal? I don't think I do. In fact, if anything, I would probably look to be buying around here when markets do come down, because I want to try to keep within this trend going upwards. So there you have it, really. It's looking at the ideas that you have on the Plus Zenfinex portal, utilizing some of the things I'm going to teach you on a regular basis. And my objective really is to help you, improve your trading, learn a few things, use some of the experience that I've gained, which I can pass on to you. And hopefully that's going to become useful to you. We've got a couple of minutes left. And if there are no questions, I'm going to pull up the slides again, just to give you a bit more information on how to access these tools. So it looks like we don't have any questions. I'm going to stop sharing, and I'm going to pull up the PowerPoint. And so just to review, we just looked at trading views and featured ideas, and we went a little bit further into the economic side as well. And I do promise you I will do a webinar just on that side of it. But in the meantime, please do come to this portal. As I said, it's absolutely free. Play around with it and see what you think, and come to these webinars. And hopefully, you'll become a regular person here, which I can then help, at various stages. And I'm always open to questions. I'm always open to help. So on that basis, I think I've covered everything I want to cover in this particular session. I'll wait 1 or 2 minutes a minute or so for any more questions. If you have any questions, let me know now. If not, I just want to double check that I haven't missed any. Yeah, I think we've kind of covered a lot of the questions already. Okay, guys, I think that is it. Thank you for attending. I really appreciate it. We covered quite a few bits and pieces. The great thing about the next Tuesday webinar is we can look at what we did today, review it, and see what happened in the intervening days. And I always find that useful, because we can go back in time, seeing what our analysis was, and seeing how prices moved accordingly. So on that note, have a great day, and look forward to seeing you on Tuesday. Thank you.